Now, most of you guys know that I left the United States 6 years ago. I had a great corporate job there, and I didn't leave totally, but let's say that I spend 90% of my time traveling all over the planet. And if you guys follow me, my previous videos, you know that I've been to over 40 countries. And now, how do I afford this lifestyle? In my previous videos, I shared with you some of my portfolio strategies, and I want now to make a video so that any one of you can live my lifestyle. Okay, so of course I built a portfolio which it is an income portfolio that generates monthly income for me to afford this lifestyle. So pretty much I do what I want, whenever I want. If I decide tomorrow to leave and go to New Zealand, well, then I can do that, okay? I don't report to anyone. Basically, I am my own boss, and I believe that this is the ultimate goal of any one of you listening. So you don't have to depend from anyone, you don't have to go to a job, you don't have to report to your boss, etc. So my previous video, I spoke about my portfolio. Actually, I have a few videos sharing with you guys what is the strategy that you have to adopt in order to build a all-weather portfolio. And what does it mean? That it doesn't matter what happens to markets, you are going to be covered. You are going to have income coming to you, deposited to your bank account, rain or shine. And I explain like every portfolio should have a three components. A component which is for income, and that is what generates your recurring monthly income. That is the engine that fuels your lifestyle. Then you're gonna have to have a component for appreciation, and then you are gonna have a component of stability. Okay, now that comes in a form of treasury bills, or if you want to take a bit more of a chance, of high dividend stocks. But in the reality, I feel very comfortable putting my money on a daily basis into treasury bills, because your money is gonna be there whenever you need it. And when the opportunity presents itself, like there was to be a stock market correction or even a stock market crash, your money is gonna be there. And actually, if the Fed is going to raise interest, well, then the dividend that you make off of your treasury bills is going to go up. and also your principal is gonna go up, because in case of a swan event, people are gonna flock to the US dollar. They're gonna sell their shares and they're gonna flock to US dollars. And that's gonna cause the yield on your treasury bills to go up. So you're gonna have to have three components to any bona fide portfolio. Now here I'm only talking today about paper. Now what does it mean? For me, buying a common stock or buying an ETF or even buying treasury bills, that's paper. Now you guys might have investments spread it out in other asset classes. It could be real estate. You can have interest in a company, or you can be a lender, etc. You can be into crypto. You can own a sport team. You can own an arena. But regardless, I'm gonna get into a separate video. I remember watching once an interview from Ray Dalio, and he was saying that you need to be diversified. You need to come up with at least 6 to 8 uncorrelated investment. And he was saying that it doesn't matter you are a real estate guy or you are a gold fan, none of that matters, because history teaches us that historically every asset class experience sooner or later a 50 to 70% drop. So that's why I recommend you guys to be well diversified. Also, it's been said that in order to generate wealth, you have to be focused into one asset class. Like Jeff Bezos made his wealth in Amazon, not in 300 different assets. Mark Zuckerberg made his wealth with Facebook or its parent company Meta, etc. Okay, the founder of Zara or the IKEA, they made their own money being focused. But diversification is how you keep your wealth. Okay, so now again, you're gonna have to build a portfolio. I'm gonna talk today about stocks, bonds, ETFs, and treasury bills. And actually you can buy treasury bills through ETFs, and that's what I do. Of course, you're gonna have to pay a little bit. They charge you 8 to 13 basis points if you buy treasury bills through an ETF, but the good thing is that they're very liquid and you can get rid of it whenever you want. There is a huge advantage of buying treasury bills ETFs, and that's why Warren Buffett, which is possibly the best investor of all time, definitely it is the best investor of our time, has more treasury bills than the US government. I believe he's now sitting on 350 billion in treasury bills, and he's got about 350 billion into his stock portfolio, and then of course he owns companies outright. So don't take my word for it. I believe anyone should own treasury bills. Actually, recently I was watching an interview with Kevin O'Leary from Shark Tank, and he said anyone should work hard to accumulate at least $5 million in treasury bills, because that is your safety net. No matter what happens, you're gonna collect your check monthly like clockwork. And it's not only that, you can then use that money to reinvest to buy more treasury bills. Now, of course, this is a slow process, because treasury bills usually pays you about 4%. As we speak, 4% annualized yield, which is not very much. But again, if the Fed was to raise rates, you're gonna make 5-6% off of your treasury bills, and that is the most stable income anyone can aim to. And now the alternative would be to buy bonds, or buy high-grade bonds, corporate bonds. Of course, there are all kinds of bonds, junk bonds, and I do that too, but I always prioritize treasury bills. The thing with bonds and junk bonds, you might be attracted to a 6, 7, 8, 9, 10% yield, but those bonds, they fluctuate a lot. And 2022 taught us a lesson where you would have lost 20 to 25% of your NAV, which is the net asset value on your treasury bonds, and still to this day you wouldn't have made up for that loss. Now, of course, you would be collecting 7, 8, 9% if that's a junk bond. If it's a high grade bond, you may be collecting 5-6%. But again, to give you an example, LQD, which is the investment grade bond from BlackRock, and it is one of the most common choice for bonds investor. That too, guys, it pays you like 5.5. But what is the expense ratio on LQD? Okay, and on top of that, you're gonna have to pay income taxes at a federal level, at a state level on that income. Now, if you buy treasury bills, you might be exempt to pay state taxes, and the expense ratio, again, you are looking at 8 to 13 basis points on that, which is really cheap. I mean, they're charging you $8 for 10 grand that you have invested in a treasury bill ETF. And the first one that comes to mind in no affiliation is TPLL, which is the short-term 1 to 3 month treasury bill ETF from Invesco, 8 basis points. BIL, it's the same thing. It's the 1 to 3 month treasury bill ETF from State Street, and charges you 13 basis points, which is nothing. Okay, so I would recommend you guys to always have a portion of your portfolio in treasury bills. Now, depending on your age, financial objectives, lifestyle, you might want to change those percentages. But for me, a safe percentage on that, it is 20% of my portfolio in treasury bills. Now, the good thing is that you never have to have cash on the side, really. I mean, you can DCA into this portfolio, which is, again, is a 3-component portfolio: an appreciation portfolio, an income portfolio component, and treasury bills. You can DCA into it, you never have to worry, you never have to have the cash on the side. Now, there are people who say that once you get to 100 grand in treasury bills or 150, 200 grand in treasury bills, you might ease up your capital allocation into treasury bills if you want, because now you have a buffer, you have a cushion. Whatever happens, you have 100 grand into treasury bills, paying you 4 grand a year, reinvest into treasury bills if you want, or you can use that 4 grand to invest it into whatever you want. But again, the good thing about treasury bills is that when the opportunity presents itself, you have it, and you have it to reallocate into those two other components of your portfolio. For example, if you buy Verizon stock that pays you 6% dividend, now you have the treasury bills on the side, you have the income generated by treasury bills, and you can use it to buy more of your Verizon stock. Okay, it is a very important component of your portfolio. Now, if you see here, the way that I have my portfolio set up, I got 40% into dividend aristocrats. Now, even if the dividend aristocrat usually means that it is a stock, it's got some requirements to be named a dividend aristocrat. So many years of paying dividends, so many years of increasing dividends, etc. And you can come up with your own high yield dividend stock. Now, for me, it comes down to two, which is O, Realty Income, and Verizon. One of them is a REIT, one of them is real estate, the other one is communication, Verizon. They are in two completely different sectors of the economy. But Realty Income has been great, has been raising dividends many years, and it's been growing revenue. I like it very much. You can rely on. And I also buy Realty Income to sell cover calls against it. Of course, first you're gonna have to have 100 shares of Realty Income, and then you can sell cover calls at the right time. Okay, there are days where there are some very, very good deals on options. Some days not so good, so you're gonna have to have an estimated income, how much you want to make on those options, and see if today is a good day. Okay, I do the same thing with Verizon. Those are two my favorite stocks to sell cover calls against. Of course, you are gonna accumulate a lot of Realty Income, and you're gonna accumulate a lot of Verizon, and you're gonna be buying those stocks at any price, because when you DCA into them, if there was to be a stock market correction, the price goes down, well, then the same amount of money is gonna buy you more shares. If the stock market goes up, the same amount of money is gonna buy you less shares, but you don't care. You have to get your income engine running. Okay. Now, the other thing too is that when the price goes down, in the case of a stock market correction, your dividend yield is gonna go up. So not only you buy more shares for the same price, but your dividend yield is going to go up, your cost basis. Guys, the first few years that you're gonna work on your portfolio, it seems like almost an insult. The dividend income is very little, but you gotta stay the course, and you gotta wait at least 5 years when the income generated by dividends is going to be higher than your contributions. Right there, you know that the snowball has started rolling. Okay. Now also I buy cover calls ETFs, and that is my income generator. Okay, cover calls ETFs. They usually pay you about 9, 10, 11, 12% on your money, which is great. It's best thing that you can do, and it's I believe it's better most of the times of buying dividends aristocrats. Now, why do I say that? Because they are usually linked to an index fund. If you buy JEPI, which is JP, it is JP Morgan premium income from selling covered calls on the S&P 500, you're gonna capture the appreciation of the S&P 500. At the same time, you're gonna collect 10% income, which is great. Think about it. The other thing that I buy is covered calls in ETFs that focus on the Nasdaq. And which are they? Are JEPQ, which is again from JP Morgan, and pays you, I believe as we speak, about 11% dividend. Usually covered calls ETFs on the Nasdaq pay you a little higher dividend than you would collect with covered calls ETF selling covered calls on the S&P 500. And it is safe. It is safe income. The only way that you might lose, you really never lose money. The only way that you might underperform is if the QQQ was to shoot up. Now in that case, because the covered call ETF is capped, of course, well then in that case you were probably better off buying the QQQ. But right now, with the stock market near all-time highs and going sideways, you are better off buying JEPQ. And again, no affiliation. I'm also an advocate of buying GPIQ, which is the same thing from Goldman Sachs. I like to scatter my covered call ETFs among 3 or 4 different providers. Again, one of them is JP Morgan and Goldman Sachs. Those are well established companies, well capitalized, and I feel very comfortable. Now JEPQ has been around at least 5 years. There are a few of them. One of them from NEOS, which I buy too. The ticker on that is QQQR, and I believe it pays you a percentage over JEPQ. The other one is from Global X, I believe is QILD. I feel comfortable. Same. Those are newer providers, but again, they are growing fast. I believe NEOS has about $9 billion in asset under management only on SPYA, which is the covered call ETF for the S&P 500. So again, you guys might pick and choose. If you are a Goldman Sachs fan, you can buy a bit more of those. But me personally, I like to diversify among at least 3 or 4 different providers of those. Now, when it comes to the appreciation component of your portfolio, I like to be focused on at least 2 or 3 different positions. And which are they? Guys, SPMO. It is the Invesco Momentum S&P 500 ETF, which is great, and it has outperformed the S&P 500 index. If you like SPY from State Street, or you like VOO from Vanguard, but regardless, SPMO has outperformed all of those. And you can pull up the chart over the past year, 5 years, 10 years, has always outperformed the S&P 500. Now it comes to a price, you're gonna have to pay a little bit more in expense ratio and collect a little lower dividend. I believe that the S&P 500 pays you 1.5 as we speak, while SPMO pays you 0.8, but you're gonna make much more money on the appreciation side than you would with the SPY, even with the dividends reinvested. I believe that is one of the greatest inventions. And of course, we already spoke about the stability component of your portfolio, which is treasury bills. Now, as you guys see here, I want to talk about the cost of living in different countries. This is Colombia, I got Brazil, I got Indonesia, I got the Philippines, Thailand, and Vietnam. Now, why did I pick those 6 countries? Because I did a research, and it seems to be those are the favorite destinations for what's called passport bros, okay, or for expats. And those countries actually provide you with a lifestyle which is similar to what you are accustomed to in the United States, but at the same time the cost of living there is much lower. Okay, so your dollar amount is gonna go way further in those countries, way further. You can stretch your dollar much more than you would in the United States. Okay, and next we're gonna speak about cost of living in the foreign countries as opposed to as living in the United States. Now, of course, most of you guys can be in a different situation than me. Could have several reasons why you couldn't leave the States, like family, or you have a business, or you have a whole bunch of different reasons to stay in the States. But I want to make this video just to give you guys an idea. You can use the same strategies that I speak in this video to live a better life in the United States. You don't have to move, or you don't have to move yet. Of course, now most of you guys can be in your 30s, 40s, 50s, 60s, 70s, and I have met a whole bunch of people, a whole bunch of expats living abroad from the States, and they are very happy with their new lifestyle. Now, if you live in Colombia, you need a quarter of what you make in the States to afford the same lifestyle. So I believe I got your attention. here I worked on a chart that I got help from Gemini from Google, which explain the global cost of living for an average single 55-year-old man in all of those countries, and then I compare it to the average cost of living in the United States. Colombia, I got Medellín, which I am very accustomed to. A 2-bedroom apartment, average rent is $500 a month. Utilities, 60 bucks a month in utilities. Feed monthly, 300. Entertainment monthly, 120. Healthcare insurance, 350, for a total monthly cost of about 1,300 bucks. This is going to average to a daily cost of 44 bucks. Now think about it. 44 bucks daily to achieve this lifestyle. Now think about it. And really, if you were to invest into real estate in Medellin, you can buy your own house, or you can buy Airbnb, or regardless. You have savings, you want to get an investment visa in Medellin like I did, you can buy a house, you can invest about 150 grand into Medellin real estate, and not only do you get an investment visa, but then you don't have to pay that 500 bucks monthly for your dwelling. Okay, so I did the same thing, went from Medellin, Colombia to São Paulo, Brazil. I mean, you guys can do the math. São Paulo, Brazil, 43 bucks daily. 43 bucks daily is gonna give you this lifestyle. Bali, Indonesia, 44 bucks. Manila in the Philippines, again 44 bucks. Bangkok, 66 bucks daily. Vietnam, Ho Chi Minh, 78 bucks daily. Now compare this to the US average, which is 114 bucks daily. Now guys, this is only an estimate. Of course, everyone has a different lifestyle, has different expenses, but I want to catch you guys' attention on this. You are making in the United States, I can imagine, 100 grand a year, 150 grand a year. Everyone is on a different bracket, but I've met people from the States living abroad from all walks of life, and they are very, very happy of their new lifestyle. Okay, so next I wanted to show you what I believe is gonna be mind-blowing and eye-opening. This is the investment capital you are going to need for passive income to generate your daily cost of living. Now, going back to what I was saying a few minutes ago, Medellin, Colombia. Now, of course, Medellin is one of the cheapest cities you will ever find in Latin America. but I believe that the ratio of cost of living and quality of life, it is one of the best that you can find all around the planet. Now, in order to generate $44 daily and fuel your lifestyle in Medellín, are you ready for this? You are going to need a little over 160 grand of invested capital. Now, in order to get to that number, I made the assumption of 10% yearly return. But guys, you can achieve 10% only by buying JEPQ. Like I was saying early in the video, 160 grand invested into JEPQ, you never have to worry about the price fluctuation. You never have to time the market. You can do your research, and in Medellín, 160 grand is going to generate the $44 daily that you need to fuel your lifestyle. Okay. Now, I want to ask, if I were to ask Gemini right quick, how many shares of JEPQ is 150 grand?
At a current price of 58.99 ASOF April 24th, 2026, 150,000 would buy you approximately 2,542 shares. Quick breakdown. Total investment, $150,000. Current share price, $58.99. Math, frac 150,000 58.99, approx 2,542.8. If your goal is to hit that 150 minus 300 daily passive income.
Now, notice something, okay? That is the amount of JEPQ share you need to accumulate in order to fuel your lifestyle in Medellín, Colombia. But also, you've seen that more or less the same capital is gonna fuel your lifestyle in São Paulo, Brazil, in the Philippines. Now, of course, whatever country you like most, I would recommend that you first travel to those countries, stay a couple of weeks at least, or to a couple of months, and get a taste of the energy of the country, if it fits your lifestyle, of course. If you like the feed, if you like the culture, I would travel to 3 or 4 of those countries beforehand and see which one you like most. Now, of course, if you are a single man and you like Latin women, well then of course your choice is Colombia or Brazil. Now, if you like Asian women, of course you want to travel to Vietnam or Thailand or the Philippines. Now, of course, you guys have different tastes, I can imagine, and based on that you make your decision. Now, notice something. Let's say that you are working on a corporate job in the United States and you say, yeah, but I don't have 150 grand now. Okay? But you can work towards that goal. And I'm gonna ask Gemini, if you plan to live the life within 3 years, you make a decision today to move out of the States within 3 years. How much capital do I need invested today if I want to retire on a $45 daily income, buying JEPQ and invest all the dividends? In other words, how much JEPQ do I need to buy throughout the next 3 years to accomplish 150 grand 3 years from now?
To reach your goal, we need to look at two different numbers. The retirement capital to get your $45 per day now, and the growth plan to reach $150,000 in 3 years. 1. The retire today number, $45 per day. To generate asterisk 45 per day, 16,425 per year, using JEPQ's current SEC yield of approximately 11.98%, you need to have total capital, approximately $137,100. Shares to buy, approximately 2,324 shares at $59 per share. 2. The 3-year growth plan, $150,000 target. If you want your portfolio to be worth $150,000 in exactly 3 years, and you are reinvesting all dividends, the amount you need to buy depends on how much you start with. Assuming the price stays relatively stable and you keep seeing an approximately 11% dividend yield. Starting amount, monthly addition needed. Total JEPQ shares, end of year 3, $0, starting fresh. $3,550 per month, approximately 2,542 shares. $50,000, $1,950 per month, approximately 2,542 shares. $100,000, $350 per month, approximately 2,542 shares. Strategic note for your masterclass.
Well, guys, this is eye-opening. Even if you were to start fresh, you make a decision today that within 3 years you want to move out of the United States and live the life of your dreams. And let's even say that you don't have anything in savings. You start fresh, you got zero in savings, which I doubt it. But let's say that you have zero and you make a decision today. You are only going to need $3,500 a month. I mean, it's mind-boggling. Like, let's even say that you are making 75 grand a year in your corporate job in the United States. 75 grand a year. How much is it? Really? Monthly. You are going to make 6 grand. You're making 6 grand monthly. Of course, I understand that you might have expenses, but you can invest 3 grand a month, monthly. If you are disciplined, you can accomplish that. 3 grand a month, starting from zero, within 3 years, you are going to have 150 grand into a JEPQ position. So again, if you invest $3,500 a month, starting from scratch, beginning today, you buy JEPQ or whatever cover call ETF you like, whatever it is, GPIQ or it is QQQI from NEOS. You start today, reinvest all the dividend, stay the course. Within 3 years, you're gonna have the amount of money necessary to fuel your lifestyle abroad. And you're gonna have a blast because you're gonna enjoy yourself, travel, go out, date women that you like. It doesn't get any better than this. Now, of course, I can imagine that most of you guys watching have at least 50 grand in savings. In that case, you make the decision today to leave the States and live the lifestyle of your dreams. You only need 2 grand a month. 2 grand a month, guys. And you can move out of the States within 3 years. And of course, if you have 100 grand, you only need 350 monthly contribution to JPQ, reinvest on all the dividends, stay the course. You never have to read an headline. You never have to watch the stock market. You are gonna set up automatic transfers from your checking account in the United States to your brokerage account, and then you're gonna set up a recurring investment plan into JPQ of 350 bucks a month. You don't have to do anything else. Keep living your life 3 years, and you're gonna have a 150 grand position into JPQ that is gonna pay you, rain or shine, the 44 bucks daily that you need to live the lifestyle of your dreams. Now, it doesn't get any better than that. And if you already have a house in the States and you already have 100 grand equity in your house, that really, I believe that nowadays 100 grand equity is nothing. I can imagine that every one of you guys watching, if you are a homeowner, possibly you already have 100 grand. You might already be able to do that. You don't have to wait that you are 59 and a half to cash your 401k. You don't have to wait that you are 65, 70. Start living the lifestyle of your dreams today with this simple reoccurring pattern that I showed you guys right here. And again, you can do the math. I just want you guys to know that in the United States, the average daily cost of living is 114 bucks. Now, of course, this is an average. If you live in New York, New Jersey, you live in Massachusetts, you live in Vermont, you live in California, I can imagine that is gonna be much higher. But if you live in Mississippi, Louisiana, now personally, I spent the bulk of my adult life in Charlotte, North Carolina, which is about number 12. Cost of living among the 50 states. But regardless, average 114. And notice something, in order to accomplish the same lifestyle in the United States, you are gonna need 416 grand invested at a 10% annualized return. So when I realized this, I decided to make this YouTube video, and I hope that this was helpful. I hope that you guys can start today working your way within 3 to 5 years to live the lifestyle that you deserve and that you always dream, starting today. Well, thank you guys for watching. I really appreciate your time. If you made it to the end, feel free to reach out. I believe that this is great, free information. If you have any questions, comments, you know where to find me. And happy investing, everyone.